All right, you ready to do another company?
Let's do it.
Let's do Capital One. Capital One Financial, symbol is COF. It says credit services industry. I think that's kind of changing. They seem to be doing more banking than just credit services, but that's
They do that, but they also bought Discover.
Yeah,
So they are kind of banking, credit services, and then also trying to compete more in that realm of Visa, MasterCard, where they also benefit from that swipe fee.
All right. Well, let's see. Not much on the short side. 1.1%. Institutional owned. 88%. Ooh, I was thinking this might be a good buy, but not a good start here. PE ratio 75 versus 27.6 for the industry. Price of sales 2.2 versus 5.1. Price to book value 1.2 versus 5. That is good. And then price to cash flow also looks good at 5.4 versus 15.1. And there is no PEG ratio, unfortunately, for Capital One Financial. Now, their earnings over the last year, and this is a strange number, maybe because of the situation with Discover, something's going on here. Earnings over the last year are down 96.6%, while the industry was up 1.4%. However, sales for Capital One were up 11.3%, just slightly ahead of the industry at 11%. And the 5-year earnings per share growth estimate is way off. It's a negative 165, I think, because of all the movements with the acquisition and so forth. Numbers just aren't working out at this point in time. They do pay a 1.1% dividend. Again, payout ratio 685%. Again, I think because the buyout is what I'm projecting here.
And I did look at this. Capital One and Discover. The merger officially finalized on May 18th, 2025. Since then, the Capital One has said that Discover has been fully acquired and is now part of their company. So I'm going to speculate here, and I'll kind of get into the earnings, but I'm going to speculate that a lot of those earnings distortions is because of this merger.
That's what I'm guessing as well. So they are a financial company. Look on the balance sheet. They don't have a current ratio because financial companies don't, but the debt to equity is very good, 0.5. That compares with the industry at 1.5. We do see a net profit margin for Capital One of only 0. They don't have a net profit margin at all. The industry is at 19.3. Return on equity is a negative 0.3 versus a positive 41. Return on invested capital 8.8. Let me see. Free cash flow looks very good though. 18.2 billion versus 16.6 billion for the industry. I think it's very hard to look at investing in a company when they go through such a major acquisition. This may be something we may have to wait for next year, new numbers, because unless you have something exciting on your side, I just can't justify buying this company.
Yeah, I mean, kind of give away a little bit. The numbers look pretty exciting actually going forward. Okay. Current price here for Capital One Financial, again, their ticker symbol is COF. $219.99, 52-week range, the low here, $143.22, and the high, $232.45. Year to date, it's been a good performer, up about 23%. Looking at the longer term, 5 years, actually up about 190%, and the 10-year return up 168%. So, it's done pretty well over those different time spans. And what I'm talking about is going forward, that valuation looks attractive. You're out to December 2026, estimated earnings per share here, $20.87. Gives you a target sell price of $346.44. So that's a forward PE right around 10.5 times.
Yeah, I looked at that number as well. Those estimates have come up the last 90 days. They were 1978. Now I showed 2075. I think you said 2080. I believe this acquisition to Discover is going to be a great thing for Capital One. I think you'll just see their earnings climb dramatically as we're seeing here.
Well, I mean, it kind of almost enables them to compete more against like an American Express, right? Because American Express doesn't use Visa and MasterCard. They have their own interchange network, where Discover has their own as well. But Capital One has more of a brand name than Discover did. When they announced that deal, I thought that was a huge win for Capital One. And I'll tell you from a personal side is we actually used Capital One on the business level, and I've been just blown away with them as a business taking care of their customers, which I think bodes well for the company long term as well.
Yeah, and I get we get 2% cash back, no issues. Yeah, we'll send you a check. I mean, they're such a great company to work with. I'll say this to our listeners: we actually looked at buying this a year or two ago, and we drug our feet, and it's just like, doggone it, why do we?
I think it honestly might have been like 2 years ago.
2 years ago.
I mean, it was, yeah.
And I think what it was...
It was pre-Discover.
Pre-Discover, yeah, definitely. But I think what it was we already had two big financial companies in the portfolio, and we were not over-concentrated. But yeah, it's a great company, and based on what you're saying, still could be a buy. But I think I'd rather be patient a little bit. And
I mean, things are expensive. I'm not jumping for joy over Capital One,
Yeah.
but yeah, I mean, a broader based pullback. I think Capital One is a good brand, a good company, well run, good valuations. I think on a pullback, this would definitely be something of interest to add to.
and actually, patience does pay off. And we just bought a company this past week, a huge investment we did in it. Been looking at that company. I'm going to say at least 2 years I wanted to buy that company. I've been watching it fall. I mean, sometimes when it comes to investing, you've got to be patient. Don't just pull the trigger. That's what those Wall Street firms want you to do, to pull it like, oh, made a mistake, sell it, buy something else.
Well, the interesting thing is, as you said, we missed Capital One, right?
Yeah. Oh, yeah.
Unfortunate.
Yep.
But also we were patient on this other company, and that benefited. I mean, that's why Warren Buffett says, investing is a zero strike game. You don't have to swing at every pitch that comes, right? But you also have to have the understanding you're going to miss things when you're patient. But just because you miss something doesn't mean something else isn't going to go on sale 6 months, next year, 2 years. There's going to be other great businesses that you can find when you are investing properly.
I've had people say, oh, you missed that one, you missed that one.
I miss something every day.
Yeah, you miss something every day. I go, but what's important is not just that one, it's your overall portfolio. Yeah. Because you might have hit a home run on one, but your rest of the money has been sitting in cash, earning very little. You've got to look at the whole portfolio. Portfolio analysis is very important to make sure you do that well. So,